self-employed tax. So as we start getting to the end of first quarter, which is around March 31st, you're going to want to either make payments or put up payments, but you want to hold anywhere between 25 and 30% of your net income, so you can have that aside for taxes. Now that is just to cover federal income. There's also a 15.3% self-employed tax, and that tax is for Social Security and Medicare. And of course, the higher earners, they may want to put more aside. Does that mean you're going to use it all? It doesn't. Is it possible there can be more? It is. It all depends on your income for that year. So the main reason we want to start putting money aside is so that when the time comes, there will not be a problem. We also want to make sure you understand that it's between your net and not your gross. Taxes are calculated on your net earnings. Profits after business deductions, that's what they're taxing, not the total revenue. Also, I want to remind you of the quarterly estimate payments. So you can make estimated payments to the IRS April 15th, June 15th, September 15th, and January 15th to avoid penalties. You're going to include or factor in that 15.3% for self-employed tax plus your marginal federal tax income. And most people are taxed anywhere between 15 and 37%. So these are just some numbers you want to know, some percentages you want to know, so you can make sure you're putting up enough, or at least know what to expect. You are in a more controlled environment if you are not stressed. So make sure you are doing your documentation. Make sure you are bookkeeping the information. Not only do you want to just write down what you paid for or who you paid, you want to have times, you want to have dates, you want to have the actual receipt, you want to have the person name. The main goal is to make sure not only is it bookkeep, but it's usable. And it cannot be usable if you have no factual evidence, documentation behind it. Until next time, later.